Hi, this is Bob Miglani, bestselling author of Embrace the Chaos. If you're running a business on how to get relief on the various SBA small business initiatives and the government programs that exist for helping small businesses weather this chaos. Sitting next to me is a business owner who happens to be my wife, Dr. Shefali Miglani.
Hello.
And a guest we have is a subject matter expert, and Samir Mittal. Samir, hello, how are you?
Hey, hi, Baba, hi, Shefali.
So Samir, tell us a little bit about yourself, and then I want to go right into how we can help small business owners understand the complex regulations and rules and laws that exist for providing relief for small companies and perhaps even medium-sized companies today. So Samir, I'm going to just share, you go ahead and start the conversation. Tell us a little bit about yourself, and then please let's get into the programs.
Sure. Again, my name is Samir Mittal. I'm the managing partner of an investment banking firm, Principals Equity. We are based out of New York and New Jersey. And thank you, Bob, for arranging this webcast. We are offering a service to small business, mid-sized business owners through a sister entity called PGV Advisors. The reason to do that is mainly from a regulatory perspective. We are able to do certain things through the investment banking versus certain things we have to do through a sister concern, which is obviously part of our group, but it's a separate entity. PGV is basically a team of advisors and merchant bankers with 10 global locations and several subject matter experts. The initiative that we have started that we are going to talk about today is around the stimulus package that came out from the government. This was approved last Friday, and there was a piece that was approved before that. There are essentially three different aspects of this program. This program is being circulated under something called as 7B. I'm sure people are aware of what 7A and 504. Those are the loan programs that SBA has for starting new businesses, for working with acquisitions of businesses. 7B is more around the stimulus program. There are three parts to it. One is called EIDL, Economic Injury Disaster Loan, Payroll Protection Program, and Small Business Debt Relief. And I will go through each of these in detail. But basically, these are the three programs out there. There will be several additional programs that will probably come out. But we don't know what they would look like, but I'm sure there will be other things coming out. This presentation is more about, kind of advising everybody what is out there. And then either you can do this yourself, where you go on the SBA website and figure things out, or you can work with us in terms of what the options should be, what gives you the best return from a loan perspective, from a grants perspective. And we'll discuss more in detail as far as how we get there. So the overview is, there's significant expansion in the SBA lending. SBA lending was about 30 billion. They raised that to 50 billion. They also passed a CARES Act that Bob had talked about. That's 2 trillion. The main thesis of this is to keep employees employed and cover operating expenses. It's coming out in two different components. Phase one, which got passed about a week and a half ago, was Economic Injury Disaster Loan. And phase three, which got passed recently on Friday, was the CARES Act. Both these programs are being managed by SBA, so they do fall under the SBA authority. The difference is that EIDL is being managed by them directly, and all the lending and all the checks and balances are with SBA. The CARES Act is being managed, again, it's rolled out by SBA, but the lending is being done by SBA approved lenders. And when I say SBA approved lenders, most banks that you deal with are SBA approved lenders. And then there are SBA approved lenders that are non-banking institutions. So one of the things that we have been able to do is that we work with all the banks and non-banking institutions. Our relationships with non-banking institutions is where we are getting a lot more traction in terms of getting these loans done quickly and accurately to a large extent. Banks are still trying to figure out what to do, how to do it. versus non-bank institutions, which are, again, are approved by SBA, are rolling this out at a much faster pace. So what we are seeing is this program opened today. We are able to get the applications in and usually try to get funded on the CARES Act, under the CARES Act, within 3 to 4 days. While the banks are taking obviously longer because of the process that they are under. What is EIDL? EIDL is a $10 billion program that was started by SBA, expansion of the regular SBA program. It is predominantly a loan program, and people are able to apply through the EIDL, get loans for payroll, rent, and operating expenses. The way this works is once you apply for the EIDL, you're automatically granted $10,000 unless you have had some criminal issues or have not kept up to your IRS payment plans or things like that. It's pretty much, it's a grant that's kind of being given to everybody. So when you apply for this, you get a $10,000 grant, and then your application is in queue for additional programs. What we are doing for people is people that are getting engaged with us, we are actually processing the EIDL and the PPA applications both at the same time, getting the $10,000 to them pretty much right away within 3 days, and also putting the PPP application in, which also gets processed within 3 days.
Okay.
The highlights of the program that we have under the EIDL is it's 100% guaranteed by SBA. So there is no personal guarantees required for this. The $10,000, as I mentioned, is given within 3 days. This is a grant; it's not a loan. Anything beyond the $10,000 would be a loan, and that is working with the SBA credit officer to determine what that amount would be. There's no guidance on how they are calculating that amount, and that's something that we would work with the client and with the SBA lender. The rates are as low as 3.75, and if they go up to 4%, that's based on credit. It's a 30-year note. If the loan is under $200,000, it is the personal guarantees are waived on it, and there is no regulation. There's no requirement that you have to be in business for 1 year, or you have to you have to apply for credit somewhere else and get denied and then come back. It's a fairly streamlined process that they have. The one thing to mention, a lot of these things are fluid and can change at any time. So information that we are giving is based on our current knowledge, and that can change. How the loan amount is calculated is still unknown, and that will probably be clarified in the next few days. The application process is directly through SBA, and the definition of small business is fairly simple. It's basically a number of employees. The number of employees have to be under 500. The difference is that if you have multiple companies, they will combine all employees in all the companies, that number has to be under 500. The cover period is January 31st through December 31st of 2020. The loan that is beyond the 10,000 is based upon the applicant's credit score, not the company's, but applicants, the owner's credit score, and they are being pretty lenient on this credit score. What we have heard is the credit score, even if it's under 650, is being accepted. But again, this information is changing. And the EIDL is open at this point in time, and people can apply. If they're going through us, then we are applying it for them.
Would this, so just 1 second question, Samir, thank you. So the EIDL, does that apply for gig workers and freelancers who might be a one-person shop? If
they're getting payroll through their one-person shop, whether it's under 1099 or under W-2, they are eligible for this.
Okay.
And that probably will get more into in the PPP section, but in this EIDL is as far as you have a employee identification number, and you're technically in business, there are no real guidance in terms of what that means. But as far as you have the EIN number, you can apply for this.
Okay.
They are asking for what your revenue is and what your gross margins are. But again, that's more information that they want you to fill. That does not mean that will disqualify you from this program.
Got it.
The second program, which is under Section 3, was the Payroll Protection Program. This was approved last Friday, and it's intended mainly to cover payroll. The way this is working, it's a much larger initiative. It's 350 billion of funds versus 10 billion. The way it's being calculated is they take your annual payroll divided by 12, and they give you 2.5 times that. So if your annual payroll is $120,000, that's $10,000 a month. So they would basically calculate, divide that by 12. So that's 10,000 a month times 2.5. So that's 25,000. So they would pretty much give you the 25,000. No credit requirements, no underwriting requirements. It's basically there for asking. It is intended to cover payroll, benefits, rent, utilities, interest on your mortgage, and on other debt obligations. What you have to be careful about is that they will ask you for your 941 and 940 tax forms just to verify the payroll. And that's pretty much about it. The loan has an interesting feature that it is forgivable, and those guidance is going to come out after June 30th. But if you use 75% or higher of the amount that's given to you, the loan is forgivable 100%. If you use it for payroll. If you use it for other things like rent, utilities, then they will question it. But as far as it's 75% is used for payroll, the entire amount will be forgivable. The highlights of this program are, again, it's 100% guaranteed by SBA. So that's why if you go to a bank or if you go to a non-banking SBA lender, there is no underwriting. It's just a very simple calculation. The interest rate on this has changed as of last night. It's now at 1%, and the term of the loan is 2 years. In all probability, most of these loans are going to be forgiven. So the interest rate and the term is kind of irrelevant, but it is out there in case it's not forgiven. You can defer any kind of payments for 6 to 12 months, and as I said, it's eligible for forgiveness. The way to calculate the forgiveness, as I mentioned, was it's an 8-week program, and if you spend 75% on payroll, it is fully forgiven. The only caveat is people that make over $100,000, only the first $100,000 will be calculated within the payroll amounts. So if your payroll is $125,000, the $25,000 would not be calculated as part of the loan that would be given to you. The applications for this is through SBA approved lenders. Now, as I mentioned, SBA approved lenders could be non-banks or banks. Non-banks are processing it faster than banks, but banks will catch up over a period of time. The other thing is that the business has to be in operation before February 15th, 2020, 500 employees or less, and that you have to be impacted by COVID-19. At this point in time, according to the government, everybody is impacted with COVID-19, so that technically goes away. It does cover sole proprietors, Bob, that you mentioned, in terms of the gig workers or individual workers, as far as they have payroll, and the payroll could be in a 1099 form or in a W-2 form. It does cover full-time, part-time, seasonal, every type of workers that is out there. The application process is opened today on this.
So just a question on this, on the PPP, Samir, if you apply and you have 8 weeks to use it, right? Or is it, tell me about the 8 weeks, because sometimes if you're not open, if your business is not in operation, what are you going to do?
Right. For example, Governor Murphy or CDC has required me to stop all kind of routine eye care. And in that case, I can't go back till they loosen up those restrictions or mandates. And I want to apply for the loan, but I don't know when to apply because I'm thinking, okay, well, I only have 8 weeks to use up this loan. Otherwise, it's not going to be forgiven. So
that's a little bit of a misnomer. The 8-week period is the payroll period, and that's why this process is changing as we speak. The way the loan is calculated, there's two parts to it. There's a loan, and then there is the forgiveness. The way the loan is being calculated is your 2019 payroll, average monthly payroll times 2.5. So there is no 8-week process for that. It's basically a 2.5 times your monthly payroll.
Yeah.
So as an example, you have 120,000 of payroll per year, 10,000 a month, you get 2.5, you get $25,000.
Right.
You have that $25,000 that you can spend any point in time before the end of June of 2020. As of right now, that date might get extended.
Okay, so it's not that, let's say if I get the loan next week, that I have to use it up 8 weeks after that.
No, you don't. You get the loan, you can kind of have the loan in your account.
Yeah.
But it has to be you have to start using it by June 30th.
Oh, really? Because everybody I've been talking to my colleagues, and that's where the confusion lies, is because we don't know when to apply for it, because as soon as the loan originates, people think that they have to use it for the next 8 weeks and bring back their employees, even though we're not ready to bring back our employees earliest, May 1st.
So the guidance that we have been given is that once you apply for the loan, you get the loan, you don't have to use the loan right away. You have to use the loan in the best time frame that you can use it in. It should be before June 30th of 2020. From what I understand, that date might get changed depending on what happens with the virus, how extended it gets. But you have to start using that, on or before June 30th, 2020. And it is based on that you make a material, what do you call it as?
Use
Of bringing your employees back.
Right. So technically, I can bring back my employees June 30th and then use it for the next, July and August.
Correct. You can.
And
do
then
that.
it would be forgiven.
It will be forgiven if you have used 75% or higher towards payroll.
Correct. Okay.
And as far as what we know right now, they are not going to look at every single person that you had, a John Brown that was working for you. Did you bring back John Brown, or did you bring back a Mr. Smith? It doesn't matter who the person is. They're going to look at the total headcount and the total payroll amount.
Got it. That's very helpful.
Because actually, you can actually bring yourself back in a way, right? That's the other part of it too. But obviously,
you can bring yourself back if you are getting paid when you were in a normal circumstances. It will be just easier. If you're not taking a W-2 or a 1099 and you bring yourself back, that still should work, but there's no specific guidance on that.
Okay, great.
Okay, but you can be part of the headcount, yes.
Yes.
Okay, so that's the basic stuff on the CARES Act and the EIDL. And on the chart that I have here is just a very, very short summary of what each of these is. Great. And happy to circulate this deck if you would like, but it pretty much what I've talked about is what we have kind of gone through.
That's great.
Now, weighing your options, the things that go into weighing your options is what is the loan amount, what documentation is needed, what is the timeline, things like that. So what we have been told is PPP, which is the payroll protection program, the main thing that you need is your payroll reports and the amount of your yearly payroll, and then the calculation of what monthly average is and 2.5 times. So it's a pretty clean, straightforward, black and white number. And that money can be used for, as I mentioned, for payroll, rent, interest on your mortgage, and certain other operating expenses. The documentation that is needed for that, again, we have a list that we can circulate to everybody, but it's going to be predominantly your business formation document, your 941, 940s, which are your payroll reports, and a very simple application that gets filled. The only caveat is the only way that you would not qualify for this program is if you've had a criminal record. You have to reveal that. That's number one. Or number two, if you're delinquent on any government loans or any IRS payments plan that you might have. And again, it is up to the lender. There is a lot of leeway for the lender to kind of waive these requirements, but that's the requirements that we have been told. Timeline for PPP, they're saying within 3 weeks. but that timeline keeps changing. What we are doing it through the non-SBA lenders is usually much shorter, but people can go to an to your bank, and your banks can process it. Although the banks are not taking applications today, they will probably start taking it early next week, and then it's a queue system.
Okay.
The other two other things that are also out there, which are besides the emergency programs, are SBA Express loans. If you go to your bank that is an SBA lender, you can ask them for an express loan, and the express loan limits have been increased to, I think, 50,000. It used to be 25, and that's a one-page application. It's based on credit. It's based on certain metrics, and you can get the money right away. People that have an existing SBA loan, and that could be a 7A or a 504, which are the two programs that are offered by SBA. SBA has $17 billion allocated towards these, and SBA is actually going to pay for 6 months of your principal and interest. So that's an interesting feature when that if you do have a loan, 6 months of your loan payments are being paid by SBA.
Oh, so talk to me about that. Yeah, we heard about this actually yesterday. So is that the is that 7A program? Tell me about that a little bit.
So SBA had come out with two programs. One was this program has been in existence forever. Under 7A, it's a program where you actually can get a loan in order to buy a business or start a new business or merge into another business. That's 7A. The 504 is more for real estate. So it's an SBA program that is geared towards buying hotels, doing construction on hotel properties, on multifamily properties. So that's a 504 program. So these two programs are very popular programs that SBA has had for many, many years. The amount that they were doing under these programs were about 30 billion a year. They raised that to 50 billion. So they have expanded those two programs also. And under this new emergency initiative that has come out, what SBA is doing is they are paying for 6 months, up to 6 months of the principal and interest payment that you were due on these loans. So suppose you have a payment of $20,000 a month that is tied to your 7A or 504 program. The SBA will pay 75% of that to the bank as a payment because they had guaranteed 75%, and you would still be responsible for the 25%.
That's if you have a current that's if you currently have
if you have a current loan through the SBA.
Right. Well, what if you don't? What if you
that doesn't apply to you then?
Can you apply now?
Loan, then it doesn't apply to anything that you're trying to do. Okay. The things to avoid out there, and I know that everybody needs capital ASAP, is things like credit card advances, payroll, what they call it as paycheck loans. Mm-hmm. Things like that can be extremely expensive. We have seen rates on that at 30-40%, which are usury rates, but they are still legally allowed. It's almost better to try to wait a few days to try to get these done rather than try to go out there and just pick up any kind of thing that's being thrown at you. There are several state and loan programs and grants that are also in play right now. New Jersey has programs that are through the New Jersey EDA that companies can get loans. Again, they are pretty low interest loans, and New Jersey EDA is actually being fairly lenient on these loans. So that's the other area that you could also go to. All these things are in addition to each other, not that you can go for one and you can't go for one. It is you can go for one, you can go for second, you can go for third. So they're all in addition. The only caveat, at least at the federal level, and we don't have the state information as of yet, but at the federal level, if you get a loan under the EIDL and you get a loan under the PPP, you can't use it for the same same use. So you can't use, if you have a PPP and you're paying payroll and you get an EIDL loan, you can't use that to pay payroll, but you can use it for other expenses. From a forgiveness perspective. So if you want your loan to be forgiven, you just have to be careful how you use that money, and you kind of capture it, keep all your records, so that when you go to the bank in late June, early July, whenever this dates come up, you can give them the full package of all the information, and the loan will be forgiven.
Great.
In on those lines, I've heard, or it's my understanding that we should apply as small business owners. We should apply for PPP first, and then apply for the EIDL loan, because and how do we calculate how much? We know PPP is 2.5 times your average payroll, but then how do we sort of calculate how much EIDL loan that I want to take out, and what are those?
So there has not been any guidance that has been given how that gets calculated. Advice to our clients is, when we are doing it for our clients, we are applying for both. I would recommend applying for both, because EIDL, you get the $10,000 without any questions, without any paperwork. So might as well get that. That's a grant. So it's basically having funds to you right away without having to pay that back. Once you're processed in the system, you will get a call from SBA, a loan consultant, and then they will work with you in order to figure out what that amount should be if you need additional capital. With our clients, we are working with SBA to kind of position them. We are looking at their financials, kind of coming up with an ask. Not that SBA will give us that, but at least we are giving them validation that why are we asking for this much money, or not asking for any money. Also keep in mind that $200,000 under the EIDL is without any personal guarantees, and it is a loan. It's a 30-year loan with a maximum of 4%. So it's very, very cheap capital and very long-term capital. Mm-hmm. So it's almost having that in your back pocket as an option to get some money. And if you get the money, you can always pay it back. There is no prepayment penalties. So it's just nice to have the capital. On the PPP program, again, as you rightly said, Shefali, it's a very black and white calculation, and it is a loan that will be forgiven if you use it for payroll. So again, it's a no-brainer to try to take that money and use it for what it can be used for.
So you're saying apply for them concurrently together?
Apply for them concurrently.
Okay.
Okay. And as I said, if you go to the SBA website, it's pretty easy to apply for the EDIL or EILD, sorry. The PPP has not, there are applications that have been put out there, but the whole process has not been completely streamlined. And I'm thinking that it should be streamlined over the weekend.
Okay.
And if you do want to work with us, then obviously we will send you the forms, and we would basically apply it for you. We are doing it through a web portal, so all the information is entered through a web portal, and it kind of goes through automatically.
Okay, so you're saying if we go through you, it's going to be expedited, it's going to be done right, and it's going to be expedited?
So what I can say is that it will be done right.
Yeah.
In our experience, it will be expedited, but we can't guarantee that because we don't know what volume is going to be coming through.
Okay.
We are trying to get them processed within 2 or 3 days is what we are trying to do.
And can a public company apply if they're under 500 employees as well?
As far as I'm aware, the only constraint is the 500 or less employees.
Right.
I think any kind of company can apply, but you just have to be under 500.
Got it. Okay. So, and then where do people reach you if they're interested in using your service? And I suppose explain a little bit about how you work in your service to help business people get access to these loans.
So I will share my email address, and that would be the best way to get the information out to us and reach out. And then we will call, myself or somebody on my team will call and discuss the whole thing with the potential client.
And you don't go through traditional banks, but you go through authorized and approved financial institutions. Is that right?
So we go through SBA approved and authorized SBA lenders. Wonderful. They may not be financial institutions, but they have been approved by SBA for this program, or even the 7A programs. But we have just found them to be more flexible, and there is speed to trying to get this thing done. It's $350 billion, which sounds like a lot of money, but there's 30 million small businesses in the US, and everybody would be going for this.
Right.
There is a timing element, and the faster you get your application in, the better it is. I do believe that the programs will get expanded in the next phase of the Senate that'll come through. But again, there's no guarantees on that.
Okay, great. I think this has been very helpful for me, certainly. I don't know
Very helpful.
for Dr. Miglani, who owns a small business as well. This is Bob Miglani. I want to say thank you, Samir, for your time. I really appreciate it. And if you can we circulate the deck around as well,
Yes,
or just share something?
I'll email the deck to you.
Great. Samir, thank you so much for your time. We appreciate it. For all of those of you who have been with us today, thank you very much. If you have any questions, I'm going to put in Samir's information at the bottom so you can email directly Samir and his team, and we'll take it from there. So with love and respect for all that you do, thank you very much, Samir. Have a great day.